Ned, investors seem to throw off a cloak of doubt and things looked a bit brighter. Maybe it's the prospect of all those foreign tourists and their credit cards and money coming into the country.
Absolutely, Ross. It was a solid day of trading on the stock market today. There were some good profit results and higher commodity prices, and that lifted the market. So the ASX 200 here finished up about 1%. Some familiar faces in the best performers today. Travel stocks, they again did well after the border reopening announcement yesterday. So Webjet and Flight Centre were both up pretty strongly, and expect them to trade pretty positively as we get closer to February 21, when tourists can return to Australia. Suncorp's profit beat market expectations, so its shares jumped about 5.5%. And then the iron ore miners did well. The iron ore price has just hit $150 a tonne in Singapore. It's up sharply since November, so BHP lifted today by almost 4%. Magellan also lifted after its fall yesterday, and Macquarie Group, that was higher after its quarterly update. But looking at some of the worst performers, the list today was dominated by tech stocks. They continued to be sold off by investors. Machine learning data company Appen fell. Its shares are down about 26% this year. Satellite imagery business Nearmap dropped, along with Nanosonics, which announced its sales agreement in North America was changing, so it was down about 5%. PointsBet Holdings and REA Group both finishing the day lower too. Having a quick look at the currency, the Aussie dollar was down slightly today. It's buying about 71.06 US cents. And Ross, don't underestimate the strength of the iron ore price today on the Australian stock market.
I've got to say, really, there's no doubt, Ed, that the iron ore price in particular has been one of the big features of it. And if you have a look at the best and worst movers on the stock market this year so far, dominated by tech shares, which have really almost fallen with the US markets, whereas it's energy stocks, it's the iron ore companies, it's the gas producers, Woodside, it's AGL is sitting up there. I mean, and that's as a result of the higher commodity prices. So there's been a real twist in the market just in the space of this last 6 weeks or so.
Exactly. You look at the iron ore price, back in November, it was $80 a tonne. It's now at $150 a tonne. It's up about 88% just over the course of a couple of months. And the other commodity that's doing really well today as well is Australian coking coal. According to the Commonwealth Bank, that's just hit a record high of $445 a tonne. So that's a phenomenal result for Aussie
Which is really interesting, given the fact that there are so many people in the community to think that coal is dead and won't go on. But of course, it is going to keep on going, and especially in the steel making process, while there is no other way to make steel. One other thing I wanted to mention, SEEK today indicated that there are way more job opportunities out there than what there are people to fill them. They feel as though people are reluctant to fill those jobs. I want to pick up here Josh Frydenberg, in particular, saying the way to get a pay rise these days, the Reserve Bank's talking about this, is actually to change jobs. Have a listen to this one.
We are seeing a great reshuffle, not a great resignation. Switching jobs allow workers to move up the job ladder for better pay. Treasury's latest analysis of single-touch payroll shows that workers that have moved jobs have typically seen an increase in wages of between 8 and 10%. These workers who switch jobs and see higher wages are also leading to more productive firms, helping those firms grow.